Shares of AI-powered lending platform Upstart have been smashed since earnings, down almost 54% since they reported. I'm Jason Hall. This is The Smattering. If you're watching this video, you're probably trying to decide, is this a time to buy Upstart on the dip? Maybe you own shares and you're thinking, man, I got to sell. It's time to get out of here before things get worse. We're going to talk about that right now. Some greater context with what's going on with Upstart's business, thinking the short term and also the long term. Before we get to that, though, I just want to thank the Motley Fool who sponsors our videos. If you're looking for even more great stock ideas than what we're going to talk about here right now, the Motley Fool's got something for you. Go to our special link, fool.com/the smattering. The Fool's going to give you its 10 best stocks to buy right now. Be sure to check that out. Again, fool.com/the smattering. You see it right on this screen. Okay, let's talk again about what's going on with Upstart. Just to put it into context here, 54% decline. It's like the stock just jumped off a cliff, following the lemmings off the cliff. So exactly what happened? I'm going to pull up the earnings slide and I'm going to share with you exactly what happened. $136 million in revenue, down 40% from last year. But you know what? It was better than expected. We knew it was going to be bad. The prior couple quarters have not been great. The reality is that this is just kind of a tough time in the consumer lending space. The operating loss actually increased, not a great thing, but we did see something positive. The contribution profit margin increased 67% versus 47% year over year. Net income, net loss, actually a little bit smaller, but adjusted EBITDA positive and also almost doubled from year over year, $11 million in positive adjusted EBITDA. Okay, so again, this was okay. We expected that it was going to decline, but it was okay. Now, let's talk about a couple of other things that played a role in it. This is one thing that definitely played some role. UMI, that's the Upstart Macro Index. This is an index that they do that kind of helps explain what they see in terms of macro risk to lending, particularly the kind of lending that Upstart originates on its platform. So one is kind of the baseline. Anything below that is like, that's positive and healthy. 1.68, that's the highest it's ever been. And that underpins some concerns about trends with consumer lending and the consumer economy. So that's one thing. Now, we also can talk a little bit about the company's guidance looking forward. Look, about $140 million in revenue. And you're like, well, hey, that's a little better than we just saw in the second quarter. That's true. But again, still not the expectations that we're going to start lapping the bad results and kind of start turning positive. Here's another one. Contribution margin is actually expected to decline just a small amount. Not great expectations. Adjusted EBITDA, again, $5 million versus the $11 million that are just turned in. Not great things right there. All right. I want to do one more thing here before we really get into the looking forward and looking back. So again, you look at this chart and you're like, wow, 54% decline. Man, that's tough. But here, if we go back to the beginning of the year, even with a big, huge sell-off, the stock is still up 151%. So man, all of those ways to think about it. It's way down. Well, if I bought it earlier this year, it's way up. What does it really mean? Let's zoom out a little bit further here. Let's go back to the company's IPO. Went public end of 2020. Stock absolutely zoomed up, was up like, I don't know, 11-fold in like less than a year. Huge mammoth returns. And of course, since that peak, it's down by 91%. So there's a lot of different ways you can think about the stock up, the stock down. Here's the best thing investors can do. Again, zoom out, stop thinking about, is it up from some point or down? And just think, well, I have money to deploy, or I own this business. What is it worth? And what is the potential for its business? So here we go. $2.8 billion market cap. That's what the market's valuing this company at today, is $2.8 billion. Well, what is the size of the market that it's competing in? Let's look at this slide that the company puts in its presentations that does help us get some context. This little gray box right here, this gray rectangle, the light gray one, that's personal lending. That's the vast majority of its business today. And that's a $170 billion market. And this is a company that's talking about doing $140 million in revenue in the next quarter. So it has a tiny portion of this market. It's expanding into auto. We know this is an area that it's starting to get some traction in. You put those two together and you're looking at well over $900 billion potential market. That's fantastic. Small business, this is one that management's made a lot of noise about, is saying that it could be really compelling for what they do. And then you have mortgages, $2 trillion. You're talking about $4 trillion in potential addressable markets as it continues to expand into these different lines. Okay, that's great. That's a huge market, right? $2.78 billion market cap today and a $4 trillion addressable market. It can only go up, right? Well, no. See, here's the thing. We still don't know with really deep evidence how well this AI-powered origination model that Upstart has developed to assess risk, how it really performs across the full economic cycle. What does that mean? You're wondering, what is a full economic cycle? That means a normal economic period going through economic growth, which is what we get most of the time, and then going through a recession, right? So what does that mean? We just had 2020, right? That was a recession. Yeah, but we also had trillions of dollars of federal government stimulus globally, not just the US government, across the world, supporting the economy and supporting consumers. That was an artificial stimulus to get through that once in a century sort of environment. Eventually, we're going to go through a period where companies start to pull back. Maybe they start cutting, people start losing their jobs, and the economy actually does decline. Then we're going to get some questions answered about Upstart's product, because the reality is that those personal consumer loans, that's their core business right now, and that's the thing they're trying to expand beyond. These are the leading edge of risk. These are the first things that people stop paying on when they start have to make hard decisions. So we haven't gone through one of those periods since Upstart existed to find out if the product really does what the company says it will. That's why we've seen doubled their number of partners over the past year, but their volume is still way down. Their revenue is still way down because those partners are signing up, but they're really tiptoeing into trying out the product because of concerns about what's happening with the economy, with rising interest rates, inflation, all of those things putting pressure on the consumer, $1 trillion in credit card debt, the highest levels on record. So the point is, banks are being really, really risk averse right now. And until we get more information or the economy zooms back into growth mode again, where they start saying, well, let's take on some risk, we're really not fully going to know, right? So all that to say this, is Upstart a buy or not? I don't know, Upstart. I do think their product is going to deliver. We've seen some evidence. They show some track record that like the performance of their loans are better, they say, than similar loans issued based on FICO credit score. So that's what they're telling us. So you just have to make a decision. Does the potential that maybe it doesn't deliver and all of a sudden the stock's going to be worth a whole heck of a lot less because the actual product doesn't deliver? Are you willing to take on that risk? If so, maybe it makes sense for you to buy some Upstart because the growth potential is absolutely enormous, but you have to decide whether or not you're willing to take on the risk of being wrong. Because if you're wrong, if I'm wrong, this is a stock that's going to probably go down a whole lot.